80 million dead Coinbase accounts back into activity. That whole great cycle that happens in crypto summer and crypto autumn is yet to play out. I mean, don't forget, we're still basically in the middle of the pandemic when we go back to the last cycle. We're not quite, we hadn't really started anything yet. Bitcoin was just breaking 10,000 after having consolidated. So I think the most overused phrase in crypto is we're so early, but we're early in the cycle. So
hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. The rate at which this investable asset is being adopted is unprecedented in human history. By the end of 2025, there will be 1.1. There are billions of active crypto wallets. The pace of growth is truly astounding and difficult to grasp. It is set to be the most rapid accumulation of wealth we have ever witnessed. This remarkable insight comes from Raoul Pal, a seasoned macroeconomic expert and the founder of Real Vision. In his latest update to investors, Raoul meticulously analyzed every chart and research, dedicating a comprehensive 2-hour special to present his findings. The outcome of his analysis consistently points to the same conclusion. Liquidity is the driving force behind everything, and it's clear that crypto is poised to be the top-performing asset. Our financial analyst has been emphasizing to investors for months that all the necessary factors are aligning, and we are entering a period of rapid upward movement in crypto prices. As we approach the US elections, we can expect even more liquidity to flow into the economy, creating the perfect conditions for crypto prices to rise. This week, we witnessed a significant development as the SEC made a complete turnaround and granted approval for an Ethereum ETF. And lots of things Raoul Pal discusses, so please watch the video to end. And share this video and subscribe our channel Everyday Finance. Thanks.
I think that there's no new capital coming into the space right now. Now, if we think of it in terms of broader macro picture, the business cycle is only just picking up. Earnings are just picking up for companies. So we're not flush with cash in the real economy. Yes, some stocks have gone up and crypto's gone up, but not all crypto either, as we know. There's been quite a decent amount of divergence as there is over the crypto spring. So it is going to have to come from the ETF. And then it'll be all-time highs is going to be the driver. In fact, all you need actually is Bitcoin to hit all-time highs, then Sol will go, ETH will go. I think that brings NFTs alive. It brings alt season. It recycles capital. It brings those 80 million dead Coinbase accounts back into activity. That whole great cycle that happens in crypto summer and crypto autumn is yet to play out. I mean, don't forget, we're still basically in the middle of the pandemic when we go back to the last cycle. We're not quite, we hadn't really started anything yet. Bitcoin was just breaking 10,000 after having consolidated. So I think the most overused phrase in crypto is we're so early, but we're early in the cycle. So yeah, we just need fresh capital. Liquidity, there was a liquidity withdrawal I think we talked about it last week because of the tax stuff. We'll see liquidity starting to come back in. Yellen should normally inject about 250 billion of liquidity. Now she's had the tax receipts in. Before you know it, now there's less QT, liquidity comes in, it all starts happening. So I think so. I think it'll all play out, and I think ETH will outperform Bitcoin. Solana outperforms ETH. The risk curve works in the normal way, and there'll be whatever the bonkers side looks like. It'll be the memes. This side will be the stupid, crazy end of the market this time around. The NFTs were last time around, and it'll just function normally as a risk curve. I think we're very close to that moment. Super close.
Bitcoin recently achieved a significant milestone by surpassing $69,000. This upward trend, fueled by a string of encouraging developments, follows a long period of stability as the leading cryptocurrency appears to be preparing for a fresh wave of optimism. The recent increase in value has raised concerns about its long-term viability and the associated risks involved. the price of Bitcoin surged to $69,000. This is a noteworthy achievement that follows numerous efforts to escape from its prolonged period of stability. This increase was backed by a string of favorable news throughout the week, despite the sudden surge. The market continues to exhibit noticeable volatility. Bitcoin seems to be gearing up for another potential surge following a minor dip over the past few days. Investors are keeping a close eye on the market, poised to take action if the price surpasses the crucial level of $67,900, as suggested by REKT Capital. A well-known crypto analyst has recently highlighted the precarious period following the mining reward halving, where Bitcoin often faces substantial drops in value. WCT, according to Capital, even though the danger phase is over, Bitcoin may still face a correction of approximately 133% from its current value since the end of the post-halving danger zone. Bitcoin hit a high of $71,500, but this price level is facing strong resistance within the larger reaccumulation range, resulting in a price rejection. He provides an explanation. The analyst highlights that historically, Bitcoin consistently rejects the initial breakout attempt following a halving event. Based on the current market conditions, it appears that there is a reaccumulation phase underway. This phase could potentially last for around 160 days after the halving event. As a result, it is unlikely that the cryptocurrency will surpass the $70,000 mark before September 2024. During this consolidation period, the price is expected to fluctuate between $60,000 and $70,000. This information suggests that caution should be exercised when making investment decisions. Capital, as history has demonstrated, often encounters obstacles on its journey towards new highs. The recent surge of Bitcoin to $69,000 and its departure from the risky territory are positive signs. However, it is important to remain cautious. Let's get back to Raoul Pal interview.
And then everybody's been scrambling to catch up with what the hell this even means. Now, the bill, we don't know what final format and what it's actually going to mean and how good it is, but it's just showing that we can move forwards, or the US can move forwards, and none of us live in the US, but it's a big deal. And the ETH ETF, what is interesting to me, we all knew it was going to happen. But now it's happened, I'm really interested to see what narrative BlackRock put around it. What is the narrative of ETH? Because ETH kind of lost its narrative in this cycle for those of us who've been around. We kind of know what it is, but it wasn't winning the narrative game. But they're going to reframe all of this for the public. And it can't be, it's another cryptocurrency, because that's not going to sell.
Yeah.
Because people say, we've got Bitcoin. So they're going to have to sell a vision for this thing. I think you're raising a key point is, look, all of us who've been in the financial system know that every single bank and asset management firm is working on this. I mean, Goldman's had a team since 2015. So what they wanted was the regulatory clarity, which is what Fink has forced through.
Yeah.
So the explosion of innovation that's about to happen from the finance system itself, I think, is the shock. It's not going to come from NFTs and all of the stuff that we all do. It's going to come straight from the heart of the financial system. And before you know it, they're tokenizing everything, as Larry said, and they've all been desperate for this. Wall Street will have lobbied for this because it saves so much money. It's like, I keep explaining a story to everybody that I think is super valuable for people to understand. There's a friend of mine was running fixed income, currencies, commodities, and treasury at National Australia Bank. And he's just retired. And I'm like, well, what have you been up to last few years? He goes, I've been building stable coins. I'm like, why? He goes, yeah, in euros, in Aussie dollar stable coins, euro Aussie, euro US, euro whatever, Canadian, UK. I'm like, why? He's like, nobody realizes. I think it's next week. Fucking US goes T+1 equity settlement.
Wow.
FX markets are T+2.
Yeah.
Australia is T+3 because of the time zone. He's like, we're going to have to give tens of billions of dollars to our brokers to settle trades. and that takes from our regulatory capital, and they'll offer us zero interest rates on it. So we're forced to use stable coins. I'm like, oh, of course. That's a massive use case. I think Canada goes to T+1, and I think, I don't know, the UK and Europe are as well. So that's a big deal, just simply from that.
There is extensive research by Raoul Pal that presents a compelling picture of the everything code and its conclusion. With the rapid adoption of crypto and its ability to generate significant wealth, experts predict that there will be 1.1 billion active crypto wallets by the end of 2025. This indicates that we are on the verge of a significant transformation in the financial world. Outlined with great precision is the intricate relationship between liquidity and its impact on various aspects. Additionally, a compelling case is made for cryptocurrency as a highly promising asset, particularly in light of the upcoming US elections. With the influx of liquidity and the recent approval of Bitcoin and Ethereum ETFs, the stage is set for a parabolic rise in crypto prices. According to Raoul's analysis, there is a possibility that Bitcoin could reach a value of 1 million per coin by 2030, while Ethereum could reach $20,000 per coin by late 2025. These projections are backed by bipartisan support in the US and favorable liquidity conditions, indicating a promising future for cryptocurrencies. If you found this information interesting and would like to explore Raoul's comprehensive 2-hour breakdown further, please continue. According to Michael Saylor, the approval of a spot Ethereum ETF by the SEC has a positive impact on Bitcoin as it attracts more institutional investment. The chairman of MicroStrategy. According to Michael Saylor, the approval of a spot Ethereum ETF by the United States Securities and Exchange Commission, SEC, will have a positive impact on Bitcoin. Saylor believes that this permission will attract more institutional investors to the cryptocurrency market. The sailors shared their thoughts on digital currency. Specifically, Bitcoin investors will gain increased trust and a wider range of options with the approval of the spot Ethereum ETF by Maxi. They will have more choices to select from based on their preferences. The sailor asserts that the clearance will give legitimacy to the crypto asset class, with specific support from exchange-traded funds, ETFs, for Bitcoin and Ethereum. This move signifies the recognition of cryptocurrency as a legitimate asset class, with Bitcoin taking the lead. Saylor's recent change in stance, diverging from his previous position on digital currencies other than Bitcoin, is quite remarkable. In response to Saylor's failed prediction regarding the approval of a spot Ethereum ETF, he faced criticism from numerous individuals on X. Just like a financial analyst, the classification of Ethereum as a security, which happened just a few days ago, has caused quite a stir within the internet community. It has been observed that the approval of an Ethereum ETF is expected to greatly enhance Bitcoin's position in the cryptocurrency market. This development is seen by some as a reality check for those who doubted Bitcoin's potential. Having the support of the entire cryptocurrency industry undoubtedly strengthens Bitcoin's influence and leverage. Ethereum, with its substantial user base, provides an extra layer of security for Bitcoin. Additionally, he proposed that traditional investors may begin to view cryptocurrency as a legitimate asset class. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.